Hey everyone, welcome back to Corporate Decoder. Today we're diving into Katapult Holdings' latest quarterly report, and let me tell you, it's a bit of a roller coaster ride, a ride where the cars might just be repossessed halfway through. We're going to unpack their numbers and see if this company can stick the landing or if it's headed for a financial freefall. But before we get started, if you are all about getting corporate info straight up, then go ahead and subscribe. Also, there is a Discord community linked in the description below. This report covers Katapult's performance for the first 3 months of 2025, so let's jump right in. First, let's glance at the balance sheet. Total assets clocked in at about $88.5 million, not too shabby, but down from about $93.2 million at the end of last year. Think of assets like your possessions. If they shrink, you're losing some valuable items. Now, here's where things get interesting. Katapult's debt is pretty high. Their revolving line of credit, basically a credit card for the company, stands at $77.7 million. It's like they're maxing out their credit card. And hold on to your hats, because their accumulated deficit, which is the total of all their losses over time, is a whopping $154.1 million. Basically, they owe a lot more than they own. This is not looking good. Switching gears to their income statement, rental revenue, that is, money from leasing out products, totaled about $71.1 million for the quarter. A decent increase from last year, but their operating expenses, the cost to keep the lights on, were about $14.99 million. The company is spending a significant sum to support those operations. And here's the bottom line, a net loss of about $57 million for the quarter. Katapult is still struggling to turn a profit. That translates to a loss of $23. It means for every share, the company lost $1.23 in during the quarter. Now, let's peek at the cash flow statement. Net cash from operating activities, that is the cash coming in and out from running their business, was positive at $3.4 million. However, they were using a lot of cash to pay back debt. Those principal payments really eat into their available funds. Okay, let's dig into that debt a bit more, as it's a major storyline here. The company states the credit agreements for both their revolving line of credit and term loan end in June, meaning it's due pretty soon. They have about $7 billion of unrestricted cash, but they admit they likely won't have enough cash to pay off those debts when they come due. Their plan: refinance, essentially get a new loan to pay off the old one. But here's the kicker, it raises substantial doubt about the company's ability to continue as a going concern. In simpler terms, there's a real question mark over whether they can stay in business. Alright, on to the legal stuff. Katapult has a few ongoing legal headaches. First, there's the DCA litigation, a dispute over an old agreement which they settled for $3 million. Then there is shareholder litigation related to the accounting errors. This was previously settled for millions in cash and stock. And last but not least, FlexShopper is suing them for alleged patent infringement. Tax benefits, not so fast. They've got net operating loss carry forwards, which could reduce future taxes, but they also have a valuation allowance, meaning they're not sure if they'll actually be able to use those losses to save money. This is a common situation for companies with a history of losses. Okay, now on to risks, which they helpfully list. A biggie is their dependence on Wayfair. Losing them as a customer would be a major blow. They need to diversify their customer base big time. The heavy debt load is also a huge risk. It limits their ability to invest and adapt, and they might not be able to refinance it, which, as we discussed, could be catastrophic. And of course, there are the usual tech company worries, data breaches, software glitches, but given their financial situation, these could hit them harder than a healthier company. Alright, let's wrap this up with a look at some subsequent events, things that happened after the quarter ended, but could still impact the company. They got a limited waiver from their lenders for some defaults, basically violations of their loan agreements. So what's the verdict? Katapult is walking a tightrope. They've got some decent revenue growth, but they are seriously weighed down by debt and a history of losses and litigation issues. If they can't refinance that debt and improve financial controls, it's hard to see them surviving long term. The strengths, the mobile app seems to be gaining traction, and maybe, just maybe, they can turn things around with some savvy management and a bit of luck. Weaknesses, high debt, continued losses, and dependence on one major customer. There's a lot of uncertainty here. It is certainly a high-risk situation. What do you think about Katapult? Are they a turnaround story in the making, or is it game over? Let me know in the comments. If you found this breakdown helpful, smash that like button. It helps the channel a lot. Subscribe for more corporate deep dives, and don't forget to join our Discord community. The link is down below. Thanks for watching, and I'll see you in the next one.